Good morning, everybody. Welcome to the Flow Show. It is Pinch Punch, first of the month, 1st of October, which reminds me I didn't get the family this morning with the old Pinch Punch. So I have to keep that in reserve for when they get home from school, when the kids get home from school. Bit of a tradition in our house, waking people up. Anyway, 1st of the month, we may still have some remnants from end of month stuff, new months stuff, new quarter flows coming in, so be prepared to see maybe a little bit of fixed action later on. We already seen some this morning by Mr. 8 a.m. man. Took euro for a little ride up to near 117.80s, and then took it all the way back down again. So there's some stuff still going on. Right, let's get stuck into all the data. That's where we're going to kick off. And the BOJ's all-important Tankan survey, which they speak about a lot as being important for policy. Some of this is pretty much all the Q3 numbers. Sorry, let me shut my squawk off. Yeah, so a lot of it is Q3 numbers. And on the whole, not too bad. Big manufacturers saw sentiment at the highest since last December, but small manufacturers had the lowest sentiment since September last year. It's a little bit mixed on the components, but as you can see, large manufacturers coming in as expected, although some expectations were to rise to 15. It came in up over last month anyway. Also, non-manufacturers, or some of the diffusion indexes, as they call it, going up as well. Those non-manufacturers or smaller firms coming in at 34, so that was unchanged, but was expected to dip back. Small manufacturers, as you say there, still looking pretty weak. At 1 was expected to rise to 2. So as I say, overall, the numbers aren't too bad. Could be worse, I think, is what we can take from that one. So there's no real worries there for the BOJ. And we did get a BOJ official talking after that number, saying that the uncertainty of US tariffs has subsided since the June Tankan, but not fully dispelled. Firms are still assessing the earnings impact. We also got the PMI, final PMI, from Japan. I think it's a final, or it could just be the first one. Came in at 48.5, so not as bad as expected, but still negative over last month's 49.7. We've had a little bit of potential fun and games in the Japanese leadership thing. My good pal Michael Brown popped a tweet up from an unverified source saying that Koizumi could potentially pull out because of some election campaigning shenanigans. But I looked at the details and it relates to some messing around on social media where apparently he's asked people to put up comments and whatnot, which has forced one of his campaign team to resign. Anyway, it all looks like it's water under the bridge because he was in a TV debate with some of the other contenders, and that all pretty much got brushed under the rug. So no one seems to be fussed about it. But that's the sort of thing that was going around last night. But there's been no further news. So as I say, it doesn't look likely it's anything we need to worry about. He's still leading the race among LDP lawmakers, according to the latest Asahi poll. Now, there's two relevant polls, shall we say. There's one amongst LDP lawmakers, and there's one amongst LDP supporters. The supporters poll has Takaichi ahead, but the lawmakers poll has Koizumi ahead. So there's, if anything, it looks like it may go to a two-way battle between those two. But in the lawmakers poll, Hayashi is actually second and Takaichi's third. So it's all going to come to a head this weekend, one way or another. So all the conjecture and speculation will be ending this weekend, whatever happens. One of the main opposition parties, the DPP, their leader Tamaki, says that ETF sales could fund government spending and that the BOJ should offload all ETFs within 15 years. UEDA has set a loose 100-year timeline. Well, that's how long it will take at their current pace to offload the ETFs, which is somewhat longer than the 15 years this pod is asking for. Over in data from this morning, it's manufacturing PMI day, whether that's new or finals. Spain is a new one. They went backwards 51.5 versus the 54.3 previously. Swiss, they went backwards as well. Italy, shock, went backwards. They came in at 49 from 49.9 expected. So they moved from expansion back into contraction. France confirm that they remain in contraction after that 48.1 flash. They managed an improvement to 48.2. Whoopee! Cancel all strikes. Germany saw a bit better improvement. They went up a point to 49.5 from 48.5 flash, but that's still below last month's 49.8. Even the Greeks went backwards. That's still going on holiday again. And you can see activity dropping there to 52. Norway, I might as well read them all out. Norway, little improvement, 49.9, just below that expansion level. The Eurozone number, 49.8, again confirming the loss and back into contraction. UK, all unchanged, 46.2. That was a flash. That was August number, so no change there, still looking crap. We had Eurozone CPI out as well, all coming in as expected. Core staying at 2.3%. Headline CPI rising to 2.2 as expected. Nothing there that will worry the ECB too much. But if it keeps going up, then they'll start to worry about it a bit more. They're all very complacent over there that they won the battle on inflation on either side. We'll have to wait and see. Germany, things are looking rosy over there for engineering sector. According to the VDMA, engineering orders fell 7% in August year on year. That was versus a positive 4% in July. Domestic orders were down 5% versus flat previously. Foreign orders were down 8% versus a prior gain of 7%. So all going backwards over there. SMB, SMB head Schlegel says US pharma tariffs have raised downside risks a bit. They say inflation is expected to rise slightly in the coming quarters. That'll be a bit of relief. Uncertainty remains high, and the SMB is monitoring the situation. So Mr. Trump and his pharma tariffs have given the SMB something else to think about regarding policy. Bank of England's Lombardelli says we may want to respond to temporary rises in inflation if you think they may have a more persistent effects. Bank of England's Mann says a lot more work to do when inflation expectations drift away from the 2% target. Inflation persistence scenario is playing out, but that does not mean I have no cuts on my horizon. She's putting more weight on the inflation persisting, and so keeping rates on hold is the appropriate stance for now. She may have cuts on her horizon, but that might be a pretty long horizon at the moment. BOE's Breeden says the recent hump in inflation is unlikely to lead to additional inflationary pressure, so slightly going against what Mann's just said. The underlying disinflationary process appears to be on track, but policymakers face a balancing act. Significant rise in household inflation expectations since the recent 2024 lows has given me some pause for thought. And a continued rise in those expectations with further increases in food prices would be a cause for concern. And also, holding policy too tight hurts output and employment. ECB's Lagarde says risks to inflation appear quite contained in both directions. There's that complacency I mentioned. We are well placed to respond if the risks to inflation shift or if new shocks emerge that threaten our target. Rolling back to the data from yesterday, warned that German CPI might, those expectations might be a little low after those regionals. That proved to be the case because headline CPI came in at 2.4%, a pip above expectations. The Eurozone measure HICP came in too above expectations. And the reason why it's important to look at that, particularly if you're a US trader, you might just be waking up, walking into that data, and you think, oh, that's a beat of expectations. I better lump on the euro, without knowing that it's already been traded out with the regional numbers. So that's why it's important to make the distinction in what happens in those numbers versus those main numbers. After that, we got some house price data. And things are looking again a touch on the softish side. We're still getting some negative monthly readings there. The FHFA on the month down 0.1%. The 20 city K Schiller down 0.1% as well. And the other metrics as well down 0.3%. The year-on-year numbers are still positive, but they are coming down and have been for quite some time. This is the 20 city number from K Schiller, but the national number came in at 1.68% versus 1.89% year on year. So as I mentioned, these price gains are trending down, even though there's still gains. Jolt came out and wasn't much about anything, give or take around expectations, depending on what calendar you might be looking at. No big changes there, nothing for the market to get its teeth into. In the details, quits were a little bit lower, 3.01 million versus 3.21 million previously. Quits is the number I look at. It can be an indication of people changing up jobs. So if they feel confident about going for a better job, higher paid job, you tend to see that in the quits number. Layoffs were lower though, coming in at 1.725 versus a 1.81 prior number, so a touch lower there. So nothing too bad in that set of numbers. Consumer confidence, that came in softer than expected, was expected to fall to 96 from 97.4. Where's those numbers? They're in there somewhere. There we go. So it came in at 94.2, so that was lower. Again, in the components, current conditions, that dropped to 125.4 from a prior revised 132.4. Expectations, 73.4 from a prior revised 74.7. 1 year inflation expectations dropped to 5.8 from 6.1. So a little bit of relief there for the Fed, although that's still quite a high number we're running at. Fed heads. Fed Jefferson says the labour market is softening, could face stress if not supported. If labour force growth continues to slow, it will impact potential GDP and influence the output gap. Fed Collins says it may be appropriate to cut rates again if the data supports easing. Not that they're getting any data for the foreseeable. Supported the recent Fed rate cut, given the risks to the Fed's mandate. And now policy is modestly or mildly restrictive at the moment. It says Fed's operations would continue in the event of a government shutdown, but not having BLS data over that time would be problematic. Fed's Goolsbeast says the BLS is the best data provider in the world. And then says the jobs report, CPI are vital information for the Fed, which potentially they're not going to get. He says the lack of BLS data due to the shutdown will have an impact on the Fed. And this is the stuff we do need to be paying attention to, how all this shutdown, if it lasts, how it's going to impact the Fed. Will it cause them to go on pause, or will they just carry on regardless? He says we'll need to turn to alternative data sources if US reports are suspended during the shutdown. Fed's Logan says monetary policy is likely just modestly restrictive. Says there's limited room for additional rate cuts. and the Fed should proceed cautiously on further cuts. So none too dovish there. So we're in the shutdown. That happened midnight last night. No 11th hour deals. Trump's still banging the drum that a lot of employees may be let go during this shutdown. He also says we can do things in a shutdown that are irreversible, and says that the Democrats are taking a risk and we can cut benefits. Now that's potentially the next sticking point. There's another deadline to come in December to do with benefits and payments and all other stuff. So if this shutdown isn't sorted out by then, that's another potential crunch point that we may have to deal with. So as it stands now, we're not getting any more government data. It might be delayed, it might come out later, we just don't know. We should assume excuse me, we should assume that we're not getting nothing out from that anymore. But today we do have ADP, and then we get ISM and the S&P manufacturing as well. So that's data's coming. All the private data will be released as normal, but things like construction spending probably off the cards, and other stuff like that. Even the CFTC reporting that we get on a Friday night, the positioning, that's affected by that as well, because it's done by a government body rather than the exchanges themselves. Well, they give it to they do the numbers, but they give it to the CFTC. So that's out the window too. I'm not even sure if we get those oil inventories, as they are, well, they are a government agency, so we're probably not getting them as well, but I'll confirm that. So a lot of stuff is coming off the calendars anyway. We will still get Fed heads, unfortunately. They'll be speaking, all Fed offices, regions and such will be still ticking over. So all the governors will still be coming out and waffling. So we're going to have to be sticking to the private data, and that's going to be important for however long this shutdown lasts. OPEC Plus, we've had some fun and games going on there with what they might get up to at their meeting on Sunday. There were stories that they might increase production by between 400 and 500,000 barrels per day. That got knocked back, denied by OPEC Plus, someone in OPEC Plus, can't remember who, not that back, so it's all speculation. But then we've had more stuff coming out today. Apparently Iraq plans to increase its daily oil production from 4.4 million barrels to 5.5 million barrels by the end of this year. So that's given oil another knock, though again we've had some market experts saying that that's a bit of an optimistic target, to raise that much. Either way, oil's taken a little bit of a beating this morning. Took a beating yesterday, had a little rally, and then it's taken another beating today. Mr. Trump says that recently they were threatened by Russia, so he sent a couple of nuclear subs, well, 1 or 2 nuclear subs, he doesn't know how many, to the Russian coast. Russia's Medvedev said Trump did not send submarines to Russian shores, so who knows what's going on under the sea. We'll go and ask SpongeBob if he's seen anything going on. Right, that's it for all the data. That's all you're getting because Mr. K is off. So what we're going to have to deal with later, ISM. We're going to have particular interest in the employment numbers, I think. So this data could move markets a bit more than it usually will sometimes because we haven't got any other data coming. So look at the components, employment and prices, amongst other things, because they are the two things that are part of the Fed mandate, inflation and the labour market. So that's what markets are going to look at. So even if you get a big variation, good or bad, in the headline number, this one here, what happens in employment and prices is probably going to be what moves the market more. So even if you get this moving into contraction, if it goes up to 55, but prices drop to 50 and employment drops to 35, that is going to swing the market, okay, not the jump in the headline number. So we're we're going to be changing into a bit of a different scenario now in what data is important, what data we have to look at. But we'll keep you up to speed with all that as we move forward. No, Brand, the Fed isn't shut down. The Fed is open. All the Fed heads are open. Whether they produce things like their GDP nows, I don't know. Not that I care too much about it, but no, Fed heads are at their desks because there's still stuff to be done. It's at the moment, it's only stuff like government agencies producing data, parks, you know, park rangers and all that sort of stuff. Largely unimportant things that are being shut down. But you're an American, you should know what's being shut down in your own country, mate, more so than me. Right, let's get cracking into what's been going on. I'm going to start on the euro. As we mentioned, we've been turning around this 117.50 level a bit, trying to make a decision whether we're staying above, below. We got this little run up this morning. I've got to look at the clock. That looked like a typical 8 a.m. man move, which is when the models come online and react to whatever happened yesterday. And there may be some end of month remnants in there, as I say, new month positioning going on, flows. So we've got a little rally to near 117.80, and then that reversed all the way down to the 40s, and then we flip back up, and then we flip back down again. So this one looks like it doesn't know what it wants to do at the moment. I think there is possibly some uncertainty in the market over what impact this shutdown will actually have. Yes, we can draw comparisons to what happened last time, but that was, 7-8 years ago, or 6-7 years ago. We're in a different world now, so there's going to be people in the market who are going to think differently. So I think we're going to see a little bit of uncertainty over the few days ahead, at least until the Yanks come in and we see what the Yanks want to do with it. So much like investing, past performance isn't an indicator for future returns. Well, the same applies here. What happened in the past with shutdowns doesn't necessarily mean we're going to get the same thing today or going forward. The reality is it's all on the clock, okay? The longer it goes, the more antsy the market's going to get about it. The more worried it's going to be. What's the Fed going to do? What's the data doing that we don't know? So it really is all just a time frame thing. Okay, if we're over it by next Wednesday, then we can all get on with our lives. But if we're getting into next month, if we've crossed 35 days in the last one, if it is dragging on, then we're going to potentially see a different situation for markets. I wouldn't say starting to panic, but markets don't like uncertainty. So yes, it will look at all the other data points, but it will still have in the back of its mind what is the real stuff what's going on with the real stuff. And then we've got this job situation with Trump. Is he going to fire another load of workers? We're still waiting to see how many workers are going to actually be fired from earlier this year. And that was due to drop in one of the NFPs this month or next month. So even when we do start getting the data, it's going to be a whole big mess anyway. Long story short, I don't know what to do with it. The market doesn't know what to do with it. We just have to wait and see and trade the levels. So for the euro, we've got this support area down at 117.25, 30s, whatever you want to call it. Goes back to this area here. It does go back a bit further, but just in the short term, we've had a bit of support here recently. So that's one of the levels to keep an eye on. If we're breaking under there, then we're probably heading back down towards the low 117s. But overall direction, we're still maintaining the rally that we've seen all year. We're not even pulling back close to the 38.2. So this is just a minor pullback at the moment. But this 117.50 is becoming a bit of a key level because we aren't managing to stay above it now, and we're spending more time below. So that could be spelling trouble that we might see at least some short-term downside if we're staying below that level. The yen is still getting a bit of a shoe-in. Well, yen pairs are getting a bit of a shoe-in, I should say, the yen is strengthening quite significantly. I don't know if this is wholly part of, you know, end of month flows, or we are firmly in the orbit of the Japanese election. The fact that Koizumi is looking to be a front runner might be appeasing markets somewhat from the more yen bearish Takeichi. Again, we won't know any of that until we get to the weekend. We have had a small break under 147, and I have added some longs into there. Did I get my last ones in? Nope, my last one bid was at 146.85, so of course that came 4 pips short. Typical, but I'm not going to complain because I'm still long from down in the 145s, and I'm long a little bits from 147.10 down to the figure. So we've had a little test underneath it. This is my big line. I wanted to see what happens down here as to whether it holds. I would have preferred it to hold rather than break it, but it has half confirmed this old level down here, which has been a bit of a range low. It's one of those levels it has broken, but we could never stay below there for long. In all these moves that we've seen here, we got below, couldn't hold it, got below, couldn't hold it. Yes, we've had some big extensions around big events, but it's a level that we need to pay attention to. So we've had one little test, maybe a bit of a stop run. Let's see if another one holds again at 147. If I see that happening, that's going to give me some conviction that we might have had a little bit of a bottom to this move here. But until then, it really is open whether this one is going to continue heading down. A lot of work to do on the upside. We've already just started to see some small resistance, 147.30s. Probably going to see a bit more resistance around this area, 50s, and then the main level, or the main old levels, we get up here, 147, 60, 65, and then 148, 148, 30s. So we're looking weak, but this is a big level when we've hit this many, many times before and seen a bounce. So it looks, on paper, it looks like a reasonable stretch point, but we shall see. Cable, I know you guys and girls like to look at that. Let me come here a bit. I can get rid of that fib now because we've blown it all to smithereens. Again, looking a bit uncertain. We're just now waffling around in this range. Similar to the euro, we've had a strong uptrend all year. We had a decent pullback to the 38.2. Now we're just going a bit sideways. We couldn't get back up to those highs, but we are holding support into the sort of mid to low 133s. So that's looking pretty important. But where we go from here is really open. We're back above 134.5, which is a bit of intermediate point. We'll have the 135 figure to deal with. Pretty much the bigger level is going to be up here, 135.90s, just ahead of 136, because it was a decent stall point on the way up. We did have support in there, and then bang, 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 we've had resistance against that. So if we do get another run up there, if you're going to pick somewhere you want to be looking at shorts, that's an area you might want to consider being previous price action history there. If we break that though, we're probably going to go for another wander up towards those levels there. Elsewhere, not a lot is moving. Dollar CAD, that's another one. It's keeping its gains. It's still looking bullish. I'm still long some of this, but we're just, again, a bit undecided. We're just going sideways between the levels. 139s, 25, 30s. We're just pinging between there at the moment. So a bit of uncertainty again in here. Maybe the foot's coming off the pedal because we don't know what's going to happen with this OPEC stuff. But this one hasn't really been swinging around too much with those oil headlines. So this one looks to be in a bit of wait and see mode. If we're moving back under 139, then we're probably going to get a bit of a shove down. 138, 60, 70 is my big level under there. Alternatively, if we do manage to creep back up, we've got to take on these prior highs in this zone up here. But again, we're just keeping the upward momentum going. but that is a fairly decent traffic area up there that we've tried and tested before. Do that, then we're on target for the 140s, and that's going to be a big test in itself, being the 38.2 of that move down. Aussie, that's looking pretty good again. We've had this move since the Fed, bit of dollar buying that we saw. This one's recovering fairly strongly. This level up here, 63, 30, 35, is an old level that goes back to some price action going back 2024 and beyond. And it wasn't a surprise that we hit that on the way up, held it as support, broke back under, and now we've had 2 attempts at trying to get back there, and it's holding again. So yeah, probably draw it down and say, look, there, 25s or something, 25s, 35s. That's the area you want to be careful in. If we can do that, then we should get another one on those highs in the 67. If we can't, though, if we stay below this for any length of time, there is a risk of a steeper pullback, at least, or maybe down to these prior lows in that zone again. But just look, we might be setting up a series of lower highs, lower lows, but we'll wait and see what happens when we get to this zone and that prior low. If we break that prior low, then I think we could have something that might put us back into this box here, or see us dipping a bit further. Right, let's look at some of your cues there. Yeah, we can talk about the economic impact. It's a known unknown, Stephen. I keep mentioning that people are saying, oh, it's not going to impact GDP too much, and this and that and the other, and things do recover. So even when the economy's taken a hit, it's recovered, because it's like a light switch. 1 minute you've got no business, the next minute you've got all that business, and everyone's playing catch up. So it's a bit swings and roundabouts over what happens. And I keep mentioning, firms that have government contracts are going to get potentially hit. But as I say, it's all on the clock. If it lasts 5 minutes, no one gives a monkeys. If it lasts 3 months, that's a bigger deal. And Galaxy, yeah, that may be the case. He can't fire employees during shutdown, but it didn't stop him from firing them back in the beginning of the year, did it? Even though it's going to court cases and whatever. So yeah, that's even more mess. He could turn around today and say, I'm firing 200,000 people. Well, he's done it. Then we've got to wait for the courts to play out. And God knows how those have been affected by the shutdowns and whatnot. So who knows? Who knows? We can't say for sure what this is all going to be like. Yeah, we can use the blueprint of other shutdowns, but every time it's different. We're in a different world now to when we were 6, 7, 8 years ago. No, I'll get you, Stephen. I'm not pulling you up, mate. Just responding. I get exactly your meaning with that. Right, let's go and look at some of the metals, or go and look at gold at least, because that's staged a very good bounce off to new highs again. Didn't take much. That pullback in the end down there, pretty solid. Didn't look that way yesterday, but if you managed to grab that, well done. And we're back off to the races. So with China now on holiday, it doesn't look like the end of gold buying is over. They're on holiday for 8 days. We're still going. So if anything, that shows you what's going on in this market. Yes, we can speculate that it's this, it's that, and the other. What we do know is that it continues to get bought up pretty much at every turn, and that's not a market you want to particularly start fighting until you get some decent price action to tempt you. If we'd have got up to this high and held it and fallen, or maybe even fallen short, let's say we got, get my old pen out, we got something like this, got up to there or even there and failed, then you've got something to trade. But we haven't. We've just gone through that high and we've made a new high. So this is not yet ready to short, unless you want to try and be brave and just sort of scalp it. But this is not a market that I would look to short. until I get price action that confirms there's a reason why the market has stopped going up. You know, here would have been a potential area for a short. Might not made too much money out of it, might have ended up getting stopped, but at least you know what you're leaning against. Here you don't know what you're leaning against. Is this going to be the high? Is this going to be the high? Is this going to be the high? Who the hell knows? And as traders, we have to learn those risks and say, do I fancy jumping in this water and trying to trade here, or do I let the seas calm down a bit? So where's this going? Who knows? 3,900. We've had a little half knock. What do we get to? 38.95. So we're seeing a bit of big figure resistance, but we're not pulling back too far. So 4K on the cards. Who knows? It looks more more likely than not at this point. Silver, I know some of you are looking at that. Not one I'm looking at too much, but same story. You know, you had a reason to potentially try shorts up here at the 47, 15, 16 area because it was a higher high, although it was very short term. We're only talking a couple of days in doing that. More significantly, perhaps, is that we are, oh, that's a big fat one. I'll leave it for now. We are testing this break point. We've been above, below, above, below. If you start to see it hold, then short is not what you want to be here. Looking at longs is probably the better trade, because if you're holding here, it's going to give it the impetus to then carry on going up. But again, this one doesn't look like it's ready to stop just yet. Right. If you've got anything you want me to look at, make it quick. Otherwise, I'm just going to waffle around some of the other stuff. I mean, dollar MEX is looking a bit iffy again. I said this area, I pulled out my bottom line because we were breaking through that. I said this 30s would be potentially important. We had a little nibble under. You're not going to worry about two figures in this pair. But that bounce from there was weak, and then here we are breaking it. So every chance we can go and have a look down at these lows. Again, with this dollar weakness, this could be, as I say, some remnants from month end. This could be market worries about the shutdown, how it's going to play out. I would consider, even though I've still got my longer term short, I would consider having a little nibble down here, depending on how we're getting there, why we're getting there, just to test the bottom of that range, because it is a big old level. If we go, I think, to the weekly is probably the clearer one. So it is the 61.8 of this move, and it is a big old area down here as well. So that level comes in the top of that spike, and we've got prior price action around there too. So it is a big old level down here, and then we've got the 18 figure under that. So purely from a technical standpoint, I would maybe give this one a little go down here, like I did shorting into that 1850 the other day. I'm not going to put the house on it, but levels are levels until they're not, and it's a big enough one to give it a go. Dollar Swiss. Let me guess, that's not doing anything. Oh yeah, look at that, not doing anything. What do you want to do with that one, Ali? I know K-Man asked you the same question. Right, we have got this support area down here. I mentioned, because this happened over the Fed, we got a break of this low. Okay, now as I was talking about with gold, when you get a break of prior levels, they can be important. It signals a move's not going to stop. But that break happened over the FOMC, which was a bit of a shock event, a shock moment. Okay, so I'm sort of discounting that move, because right after we got a hold back against that level, but the bounces are looking weak. We are in a short-term downtrend since August, so it looks like we might get another test down here. Now, what happens on that test is going to be important. If we hold that quite strongly, then you're going to see a bit of a recovery. I'm not saying it's going all the way back up to 84, but it could just get back to 80 or 79.50, whatever it wants to do. But if we do see a weak bounce off of there and we can't take out this prior high, then another test after that would suggest that we're going to be seeing a break. So what we want to see, if you get something like that, then you're probably going to get something like that. Okay, that's the risk. But if it does break this high, then maybe something builds up. Maybe you start to see something that's a bit more like this. So there's several possibilities, but at the moment, just have to wait and see. This is going to be your area down here, Ali. What's strengthening the dollar? Nothing strengthening the dollar, mate. It's looking weak. Well, depending on where you're looking. We've seen a bit of dollar strength in various pairs. If you look at dollar yen, we're not seeing any strength there right now. It's still looking weak, but then that could be more of a yen move because yen pairs are still getting caned. So euro dollar coming down doesn't necessarily mean it's a dollar move. It could be a euro move. This euro yen with such pressure could be dragging down euro dollar. Okay, so that's why, as always, you need to look around, need to look at the crosses, see what winds are blowing. But it is looking messy. Okay, I can't look at something and say, oh, this is dollar strength, this is euro weakness. It's all a bit of a mix. Brian, you want to look at those 10s? Good idea. Let's have a look what's going on there. Again, not a lot going on. We're still between these two levels, 4 and 420, holding up near the top end. So you would potentially think that the dollar might be looking a bit stronger. But as I've just shown with dollar yen, we've got a big disconnect at the moment. Big disconnect with yen and yields. Okay, so something else is going on. The market is going on. Liz, Aussie CAD. Bloody hell. I've got Aussie CAD in here. I'll put it in down the bottom in where I don't go very often. Let's put it up here. Did look at it the other day, didn't I? Let's have a look, see what's going on. That's right. So we were looking at these levels, couldn't quite get down to that 90-40s. This is your important one. We're having another break. We had one break, failed. We're having another break now. You want to, again, you just want to wait and see if it starts holding. Okay, if it can't hold and comes back under, then watch this low here, 91.80s. If we fail here, break that low, then maybe we're going for a wander down, back a bit lower. But we've had this move, tried to hold. It can't yet do that. So if you're long below, great. Then you're in a strong looking position. But you've got a decision here. If we can't hold this area, do you take some money off the table? Because as I say, we've tried and can't hold a break above it. Or is this the one that goes? And if this is the one that goes, then you're going to get some decent profits on the way. What was Fed asking? We want to learn. We talk about trading gold. And talk about trading gold. Are you talking about trading spot? I'm talking about trading whatever contract my broker has. So if that's based on the spot price, based on the futures price, I think most of them are based CFDs based on the spot price. So yeah, I mean, margins are margins. You deal with it with whatever you trade. So you got to set yourself up how you want to trade it. It depends on your parameters. If you're like looking at long-term trading, then yeah, you want to look at things like ETFs and whatnot, perhaps. If you're futures trading, you got to worry about margins, rolls, and all the rest of it. But if you're trading a CFD that just follows a spot price, it doesn't really make any difference to that. But yeah, I don't think my platform isn't a futures price. It mirrors the spot price. Right, anything else for anything else? I was talking about oil. I'll have a quick look at that. I am having a little try down here against this support. Now, this is Mark's going to tell me off. This is a continuous contract, which I just mainly use for charting purposes more than anything else. because it is just a rolling number again, rather than having to deal with futures, different futures, different pictures. So we are nudging this support line, which is pretty important. It's not the first time we've done that. This is a bit of a historical area down here. It's well known. A lot of people have been trading this. We've got another bit of a support under there as well. But all this OPEC stuff, I'm having a nibble. I took a bit of profit yesterday, probably not as much as I should have done. I've added a bit more against this support this morning. Not a massive trade. If we trade 61.30s, I'll be out. But yeah, I'm just playing again another technical level down here. And let's see what it does. Right, I'm going to call that a day, folks. We've got plenty to look forward to today, no doubt, when the Yanks get in and all the politicians start jumping up and down over the shutdown, and we get to find out exactly what mess we're going to be dealing with. So take care. We move from one bit of uncertainty, a month end, quarter end, into shutdown uncertainty. So we'll all have to wait and see how that unfolds. Have a good day, everybody. We'll see you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.